Welcome to Stephen Johnson's Stocks. We're live at the Trader and Investment Summit. This is Stephen Dux, proud to be with him. What piece of advice would you give to the world if you could only sum it up in one word? Not one word, one sentence, one sentence.
Don't rush into trading. Don't think it's a get rich quick.
Bloody love it. Fantastic. Nice to meet you, brother.
Nice to meet you too.
Cheers, man. Welcome to Stephen Johnson's Stocks, everyone. I hope you guys enjoyed the introduction. I'm just in the airport now. I'm about to board the plane and head to Philly. I'm straight after the Traders and Investors Summit. So I'm going to go straight into the Excel and the trades. It was a green week, like just. But it's 3 green weeks in a row. I've never done it before. And I'm up this week as well, so it's looking like it's a 4 green weeks, green month. It's all coming together, and I just want to not put comments in, but say quick summary of the conference. Dux, thank you for reinforcing the discipline that you need to have all of these spreadsheets and you need to put your life into it. Roland, thank you just for being a good friend. You really reinforced the fact that you need to live this and breathe this night and day. And Roland is so obsessed that he even has Tim Sykes videos on in his car when he's driving to work. Who else were the other guys? Michael Good, just for being an entertaining guy. Sykes for running through the importance of Catalyst, and I think it was Michael Good as well. No, it was Tim Bowen saying like he doesn't trade a stock unless there's even unless there's a positive meaning for Catalyst. And Tim Grattoni explaining the difference between not just looking for ATMs, but looking for cash and SEC filings. And Roland went over this in depth as well, looking at the actual balance statements, not just the ATM. So really good Trader Investor Summit, met some cool people. Miles, Master, Roshi, like it was overwhelming. Like so many people are fans of the YouTube channel. So many people wanted to say hello and take a picture. It was kind of overwhelming at times, but really special. Meeting Tim Bowen as well and doing the Steady Trade podcast. We did a live interview with a guy who was just homeless and then coming across to start making money and having a better work ethic, which was inspired by Tim Sykes, which has got him back on his feet. Not trading profits, but just doing better in life. And I'll leave it at that. Live the dream. I'm so pleased I encountered this journey. I'm so pleased I met these people. I'm so pleased I saw this Sykes ad because me changing psychology is enough, not to mention trading profits to come and the amazing people I've met. So stick in, live the dream, and we will not fail. This is just a quick recap of what's going on, and we're seeing a good trend really. Back when I first started, like again winning percentage 20s, 30s, 40s, 40s, 36, 38. Bad month on the 30s, and then I've been kind of like 45, 40, 60, then 80, and we're coming into the end of the month. So I'll probably average. I've got one more trade that I've won, so that'll bring us up to 90, providing nothing goes wrong with this trade I'm in. Another green week, didn't make much at all, but green, winning all the trades. But me entries and exits are still not right. The stocks that I'm choosing are still not right. I'm being deliberately hard on myself because I know I can do so much better. And I really need to break through. And once I break through, it's not going to be making $20, $30, $40, $50 a month. It's going to be making $100, $200, $300, $400. So I'm not letting myself be happy with just being green on the month. I want much more. I want the hundreds, the 200s, the 300s. Then I want to start sizing up and having 3,000, 4,000, 5,000. Because there's no reason I cannot be Tim Sykes' next millionaire. Just small changes like tracking the stocks, watching the video lessons, keeping up to date, analyzing the spreadsheets. That's pretty much Stephen Dux said he had 17,000 spreadsheets, all based on time of day. So I'm not reaching my potential. I'm green. I'm green on the month, green on 3 green weeks in a row, best I've ever done, but I can do better. So this is a LDAX, and I'm a bit jet lagged, so it's going to be difficult to concentrate and say this properly. Keep on meeting people. Thank you to everyone who I saw. I'll leave a separate message, but I just saw 2 people in the airport being like, Stephen Johnson, it's crazy. But ALDX was a trade I took a couple of days ago. Typical gap and crap, up like 20-30%. It was on this first big red day. Gap from the 4s to the 6s. It's up 30%. I think it was on phase 2 results. Biotech company. And I was like, gap and crap, I'm going to short it. But I don't just short gap and crap stocks. What I typically look for is into the SEC filings now, because I know that Tim Sykes is he's on my case to be profitable, and and I need to get there because I've been in the challenge 11 months. So what I did to enhance me edge, I look for an ATM, and we've got in June 2017, Cantor Fitzgerald entered into an ATM, sell shares up to the value of $20 million for 1 cent per share. So we can see that they can dump shares on people, and typically with gap and crops with ATMs, they do dump the shares, but I've been having somewhat inconsistent results with this, and then Tim Grattani explained it in the Trader Investor Summit today. He's like, he had inconsistent results, so what he used to do is, a company won't dump shares unless it needs the cash. So that made us look more into the 10Q, learning kind of from the SEC filings from Michael Good. And I was thinking, right, well, do they need cash? Because if they need cash, then they'll use the market offering, then there's more chance that the stock will go down. They don't have to use the market offering just now. And I was looking at the ATM. This is the top of the 10Q. It's a quarterly statement, or it's an annual statement, the 10Q. Or is it? I think it is. I think it's the annual. So we have the 6 months to June the 30th. They've got 26 million in assets. And that's including marketable securities, but that can be turned into cash, I believe I heard Tim Grattani saying earlier on. So then I'm just thinking, like, how much money is the company burning? So in every 3 months, they're burning like 5 mil in expenses. So like in research and development and in general admin costs, they're losing 5 million every 3 months. But it says here that in terms of cash, they've actually got 15 million, and in securities, they've got another 11. So that means they've got 26 million, and they're burning 5 million every 3 months. So that means they don't really need to use the ATM for another maybe a year and 3 months. And this is where I went wrong, because if they're desperate need of cash, then they'll dump the ATM here. But it doesn't look like this company's in desperate need of cash. So I thought, oh, it's just an ATM, I'll get in pre-market, and I was in the 620s. And I was like waiting to see what would happen. It double topped, and maybe on a normal ATM you can look for the double top and short it back down. I didn't short more at the double top, I was too scared, so I was in at 620, squeezed a bit up until the 730s, and then as it was cracking down here, I was just selling and getting out back down in the 620s, 615s, because people know that there's an offering, but it's not as serious. Like I should have shorted this double top here, and I could have been in the 730s, shorting. You've got a high here. It's just popped over the high, but it's come back down. I wouldn't say it's stuff, but it's a failed breakout. Then you can short into this, and maybe you've got an average from the 720s down. If they were desperate need of cash and it wasn't at the market offering, then yeah, maybe short pre-market. But the error was not doing enough research, not looking at the cash flow, not looking at the balance. But the difference is, these days I make an error, but I'll still make money because I'm getting better. But I want to make even more money. So I need to refine these details so I can make $100, not $10. And that's the lesson of the video. It's pretty funny because I'm trying to do this before I fly. I've got 15 minutes before I need to check in. But time is literally so tight these days. I mean, I still have fun. Like I was out with Roland and a couple of the other guys. I really should shout them out. Chris was another one of the guys. I forgot the other guy's name, but there was like 4 were going out partying at the conference, and we had the best time. But unfortunately the videos have suffered, so I'm trying to get them done now. But INFI, and that's the Trader Investor Summit, and yeah, and I had a good meal with meeting the guys. I was meeting Docs, Grattani, good meal with Tim Bowen and Glenn, who we do the Stocks and Trade podcast with, Steady Trade podcast. The whole thing was awesome. I'll recap separate. But yeah, for INFI, downtrend chart, bad chart, spikes, fails, little spike fail, and I was just expecting a spike and a fail, and I got a bit caught out here. I was holding it a bit too long. We can obviously see that it's bottoming really here, and this was my mistake. But if we go kind of intraday, I mean, it spiked, had this red day here, and I was looking to buy in here for it to come down, like it would come down here, and it would come down kind of around here. But I mean, I don't know if I should short weakness. I don't know if I'll short weakness anymore. I'm more into shorting strength. So when we have this spike, and I'm kind of watching this. I'm watching the support level here. So I mean, we can put a line on it. There's clearly here's a breakout. It held the breakout. It held this support line. The resistance became support. pushed off the support, held the resistance, held the support, pushed off the support level, held the support level again when I come back down, and then when it dipped, I got short. So I was like, look, all this time, it's like bottom, 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 bottom. Now it's finally broke 120. So I got short in this crack, come back up, came back down, came back up, came back down, and it never really, I was short in weakness, and it never really came back down properly. Like a couple of times I could have made a small profit, but then when it started basing and pushing again, I was like, I'm getting out around here in the 120s, and then it ended up going up to the 135. So good read on my opinion, but yeah, I mean, I'm so much better when I short strength, and that's another thing that Duck said at the conference: don't short weakness, short strength. And it's so simple, and I'm gonna do it. So great tip from the conference. I'm really glad I attended the summit.